史上最严的境外汇款新规真的来了。
The toughest foreign remittance rules in history are really here. They kick in on January 1st next year. Before, banks only dug deep on big accounts. Now the threshold's been slammed down to just 5,000 RMB, barely $1,000. The moment a single transfer goes over that, they'll scrutinize everything: your name, ID number, remittance details, and especially the purpose of the funds. One mistake and you're done. The purpose has to be 100% real and specific now. Say you're wiring $30,000 and claim it's for travel. You better have flight tickets, hotel bookings, the whole itinerary ready to show them. This completely kills the old trick that parents of overseas students relied on: splitting tuition or living expenses into lots of tiny transfers to stay under the radar. On top of that, buying property overseas is about to get way tighter, and even your day-to-day overseas spending will be tracked much more clearly. With CRS sniffing around from the outside and Golden Tax Phase 4 plus strict Forex controls inside China, honestly, getting RMB out of the country is just going to keep getting harder and harder. The People's Bank of China has reduced the threshold for mandatory review of overseas remittances from $10,000 to $1,000. Under the new rules, any transfers above $1,000 will require banks to create a complete record of the transaction. The requirements apply not only to traditional banks but also to payment platforms such as Alipay and WeChat Pay, as well as prepaid card issuers. All related records must be preserved for a minimum of 10 years or longer if the transaction becomes part of an anti-money laundering investigation. Even transfers below $1,000 may be blocked if they raise suspicion. Authorities may examine both the source of the funds and the stated purpose of each remittance. Monitoring can be extended to transactions that do not involve a Chinese bank account or phone number.
今天我操作了一下境外账户啊，可能动作稍微有点频繁。
Today, I was playing around with my overseas account and probably made a few transfers too quickly. Literally minutes later, the Anti-Fraud Center of the Public Security Bureau calls me. I'm on the phone chatting with the officer for a solid couple of minutes before I even explain what I was doing, before I suddenly realized, oh no, this isn't a real person, it's an AI. And it was scary realistic. But the truly wild part, the entire time I was operating that foreign account, I didn't touch a single Chinese bank card, Chinese app, or Chinese phone number. Nothing. The only thing that was domestic was my internet connection. Just being on Chinese internet was enough for the system to spot unusual overseas activity, flag it in real time, and have the police AI call me automatically. So yeah, everyone take a minute and really think about what that means. China is facing stricter financial oversight amid a worsening economic situation, including collapsing real estate markets, rising local government debt, and high unemployment. Large amounts of capital are now leaving the country through multiple channels. These outflows have heightened government concerns about pressure on foreign exchange reserves and further depreciation of the yuan. With the economic crisis reaching a critical stage, authorities are intensifying controls to prevent what many view as a dangerous signal of deeper trouble. The tightened measures now cover not only traditional overseas remittances, but also trading in virtual currencies. On November 28th, the People's Bank of China issued a statement targeting the speculation and trading of virtual currencies.
完了，我操，炒币的天都塌了。
Oh no, it's game over for crypto trading. The sky's falling. Central Bank Mama just unleashed the strictest rule yet. Virtual currencies, they don't have jack for legal status like real money. No legal tender, period. They can't and won't circulate as currency anywhere in the market. And get this, any business tied to virtual currency activities, boom, illegal financial ops, full stop. Stablecoins are just another type of virtual currency, but they're a total mess right now. They can't even nail the basics like customer ID verification or anti-money laundering checks, leaving them wide open for laundering schemes, fraud, crowdfunding scams, and illegal cross-border cash moves. From here on out, every agency is locked in on enforcing the total ban, wrapping up surveillance on virtual currency crap, smashing illegal financial activities, and hitting the criminals where it hurts. But why did this hit so sudden? I'm betting it's that Cambodian Chinese guy, Chen Zi. His whole $15 billion seizure mess spooked them bad, so they fire-drilled this policy out in a frenzy. You know there's a boatload of Bitcoin and Ethereum players right here in China, right? I've got a bunch of friends deep in it. Crypto's been banned forever domestically, so they're all sneaking onto foreign platforms. But now with this dropping, could their funds actually get frozen? What a nightmare. Some netizens believe that the Chinese central bank's actions are aimed at preventing companies from using virtual currencies for transactions.
这个会议针对的是用虚拟货币、稳定币进行结算。
This meeting is specifically targeting people who use virtual currencies and stablecoins for settlement, like USDT, Bitcoin, that kind of thing. Right now, stablecoins are spreading fast, especially in Yiwu, Zhejiang. A huge number of foreign trade merchants are already using USDT to settle payments. It's said, just hearsay, that the money volume has reached $1 billion US. In Shenzhen Shuibei market, plenty of businesses also accept USDT when buying and selling gold. The central bank obviously can't tolerate this anymore.
现在很多国际贸易都是用 U 来进行结算。
Now, a lot of international trade is being settled with U currency. For those of us in cross-border trade, this is really a headache. If a client wants to pay with U currency, we first have to figure out how to receive U currency, then how to convert it into legal tender, and finally, how to bring it back into China. It's complicated. The restrictions are not limited to businesses. Ordinary individuals are also facing intense scrutiny. Many mainland residents previously believed that if currency exchange was blocked at home, they could simply travel to Hong Kong, long regarded as an international financial hub. In practice, however, Hong Kong's financial system has come under much tighter mainland control, with policies increasingly aligned with those on the mainland. Since the new stablecoin regulatory framework took effect on August 1st, numerous over-the-counter exchange shops in the city have removed their rate boards and stopped selling stablecoins to retail customers. Some outlets continue to trade unaffected currencies, dealing only in BTC, ETH, and other cryptocurrencies. Others have shut down completely, while a few remain closed while awaiting further regulatory guidance.
家人们，今天咱得说个香港金融圈的大事儿。
Big news in Hong Kong's financial world today. U currency exchange shops are officially out of business. The Financial Secretary of Hong Kong, Xu Zhenyu, recently made it clear in the Legislative Council that OTC, or the usual exchange shops, can no longer exchange stablecoins for the public. They are starting with education, but if anyone dares to do this again, they will face serious consequences. Let's make sure we understand this. Hong Kong isn't just talking casually, it's backed by stablecoin regulations. The law clearly states that only 5 types of licensed providers can engage in stablecoin-related business. For example, licensed institutions regulated by the Monetary Authority or institutions providing non-regulated stablecoins to professional investors. The rest, like unlicensed exchange shops, coin dealers, or even underground money houses, are now committing criminal activities if they keep exchanging stablecoins. I'll do the maths. The price for this crime is pretty steep. If convicted under the simple procedure, you will be fined 500,000 Hong Kong dollars and sentenced to 2 years in jail. If it's more serious, it could go up to 5 million Hong Kong dollars fine and 7 years in prison. Worse, if they continue to do this, they will be fined every day 1,000 Hong Kong dollars for the simple procedure and 100,000 Hong Kong dollars for the public prosecution procedure. The longer they drag it out, the more they lose.
Chinese authorities are particularly worried about capital quietly leaving the country through stablecoins, especially as economic pressures and outflows intensify. Hong Kong has long served as a key gateway, with numerous over-the-counter shops allowing mainland residents to convert funds into USDT and USDC. The new stablecoin regulatory framework, introduced to close this channel, targets unlicensed OTC operators and restricts public access to these US dollar peg coins. Individuals are now being directed towards licensed institutions, enabling closer centralized oversight of digital asset flows. Some foreign media reports suggest the regulations serve a broader goal, strengthening mainland-style financial control in Hong Kong rather than merely improving oversight. By limiting access to USDT and USDC, authorities may be clearing the way to promote stable-backed digital currencies, ultimately steering funds towards the People's Bank of China's eCNY. This shift towards greater control is not confined to cryptocurrencies. It is extending across Hong Kong's entire financial sector. Recently, HSBC in Hong Kong changed the application page, tightening the conditions a bit. Every brokerage is tightening up. Previously, mainland residents could apply normally, but now they need overseas proof, so banks are likely going to tighten up slowly. Since June this year, several Hong Kong brokers, including Hu2 Securities, Tiger Brokers, Longbridge, and Ha-Fu, have stopped accepting account applications from users who hold only a mainland China ID and reside in the mainland. These firms now demand proof of overseas residence or employment from applicants. A November report highlighted the growing challenges in opening bank accounts in Hong Kong, noting that the success rate for mainland residents has fallen to just 38%, a sharp decline from prior years. Key factors behind this include tougher anti-money laundering reviews, adherence to common reporting standard requirements, and elevated risk assessments. These changes represent yet another restriction on a primary route for mainland Chinese to shift capital overseas. With funds so difficult to withdraw from the country, one might assume that the money remaining in mainland China could at least circulate freely. That idea seems reasonable on the surface, but in practice, it rarely works out that way. Transferring money within mainland China is far from straightforward. A single misstep can lead to a frozen account. In more severe cases, authorities may even involve the police.
我就问你，现在大额转账怎么就这么难呢？
I just want to ask, why is it so hard to make large transfers now? A colleague of mine recently transferred 475,000 RMB from his card to another one at night. He made 2 mistakes with the password, but it eventually went through. However, the other card got frozen. The next morning, he had to go to Hangzhou for his daughter's eye exam, and throughout the trip, the police kept calling him, asking him to explain why he transferred so much money in the middle of the night. When he arrived in Hangzhou, the police even showed up at the hospital, saying they were worried he might be scammed. Isn't it ridiculous that he's being treated this way for his own money?
Netizens in the comments section are expressing their frustration. They don't regulate what they should, but they're extremely strict about things they shouldn't. People who are really being scammed have no way to fight back. Under the guise of fraud prevention, they're locking you into a financial straitjacket.
你知道现在的转账限制到底有多严重吗？
Do you know how strict bank transfers have become now? If money comes in from a stranger's account, even if it's not that huge, there's a very high chance your own card gets frozen immediately. I really don't get it. Is this to stop fraud, to prevent mistaken transfers, or because they suspect the money is dirty? If it's just mistaken transfers, fine, but if it's fraud or dirty money, shouldn't they freeze the sender's card? Why is it always the person receiving the money who gets hit? So many people are doing business these days. The second the payment arrives, they have to use it right away, pay for goods, cover something else, or send it on to the next guy. But once your card gets frozen, and everything grinds to a halt for at least another day. One netizen commented, before the transfer, the other party had to notify the bank and report to the police. Another netizen complained, this is affecting my normal life. I transferred a few thousand yuan to my dad's card, and his card got frozen. Then I couldn't fix it at the bank. I can only withdraw in person at the counter, and I can't use the ATM. It's really ridiculous. A netizen exposed an even more baffling experience.
今天去银行转账报警了。
I went to the bank to transfer money today, and they called the police. Have you noticed? Now when you go to the bank to make a transfer, you need a police officer to accompany you. A few days ago, my brother borrowed some money from us and paid it back a few days later. But my wife's bank card didn't have large transfer authorization, so we had to go to the counter. But then the timing didn't match, so I went to the counter with our IDs and cards to transfer for her. That's when the fun started. The first ridiculous question they asked was, "What's your relationship with this gentleman?" Of course, I said we're married. Then they asked, "Do you have your marriage certificate?" I've never heard of needing a marriage certificate to transfer money. Just so you know, for a transfer on behalf of someone, you just need both people's IDs and cards.
The blogger later explained that the bank staff demanded a loan agreement for what was described as a personal loan from a relative. Because no such document existed, the blogger asked the relative to draft one and send it through WeChat. The staff rejected the note, pointing out that it had been created the same day, and even examined the WeChat history between the two parties. They then announced that further verification was required and contacted the local police station. Officers confirmed the blogger's identity and legitimacy of the transfer. Only after the confirmation did the bank approve the transaction. The funds finally reached the blogger's account at 5:30 p.m., half an hour after the branch had officially closed for the day. The blogger concluded with this observation. It's ironic that a modern financial institution meant to serve society is addressing today's risks with methods that belong to the agricultural era. Another netizen shared a similar experience involving their elderly father, stating, "My dad went to withdraw 4,000 yuan for my mom at the Postal Savings Bank, but the bank manager and staff insisted he provide the marriage certificate. A man in his 90s, how many can still provide their marriage certificate? Other commenters expressed their frustration, with one noting, "I believe powerful people don't face this many obstacles. It's just the helplessness of ordinary people." And another added, "I really don't trust putting my money in the bank anymore. I've had a similar experience where I couldn't withdraw, and it was infuriating." Many commenters are now saying that money is safer in a home safe than in the bank. For ordinary people in China, earning money has become increasingly difficult with every penny hard earned. Now, even spending their hard-earned money has become a struggle. The Chinese government, under the guise of fraud prevention, anti-money laundering, and secure accounts, has layered security measures that place ordinary citizens under suspicion and restrictions. For example, elderly individuals needing to withdraw a few thousand yuan may be asked for a marriage certificate, ID, or even additional paperwork. Behind these formalities is a comprehensive control over citizens' financial freedom. This isn't just regulation, it's financial control that affects everyone, even with small deposits, currency exchanges, and everyday withdrawals. Ordinary people who work hard for their money are being stripped of their ability to control their own wealth. Under the guise of doing it for your own good, the government has created barriers that restrict those who most need the freedom to use their hard-earned money.